The risk of loss in trading futures and options can be substantial. Therefore, only a genuine risk fund should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
All right, we're back. Welcome to Commodity Classics. Pia Ianashi of Esprit Solutions. Jake Bernstein is on the line. We're going to start talking about coffee. And ladies and gentlemen, please don't be camera shy. We're testing some alpha testing, some new technology where you can ask Jake questions through your streaming video. So instructions are in the shout box. And without further ado, Jake, coffee, one of my favorite things. I think we could make a lot of money if this thing ever decided to make a big move.
You know, Michael, it's a little bit strange. Many years ago, when I first started trading, traders used to trade all kinds of strange things. They used to trade something called the heart attack spread. The heart attack spread was you buy pork bellies, you buy and you sell eggs. Okay.
Okay.
They also traded something called a breakfast spread. You buy bellies, you buy eggs, and you sell OJ. Well, you know, it's a little bit strange. No fundamental basis, in fact, for any of that stuff. But you know what's interesting? We've got the potential for a big bull market coming in sugar. We've got the potential for a big bull market coming in OJ. And I think we've already started a big bull market in coffee. So I guess we can call it the coffee trade, the breakfast trade, because the base of support is rather substantial here, but I don't really go on that. I go on what the indicators are telling me. The indicators are telling me that if we get 2 consecutive price bars above the top of the moving average channel with accumulation distribution above its moving average, then we have resumed a bull market in coffee. I think the coffee market, it's been a long time since it's made some explosive moves. I like to look at markets that have not yet made moves. Think about what has already moved. We've made big moves in the grains. We've made big moves in the energies. We've made big moves in the currencies. What hasn't moved yet? What are the big traders anxious to sink their teeth into? Those are markets that haven't moved yet. So we've got coffee, we got OJ, we got sugar, we've got the cattle, we've got the hogs. They've already started to move per my forecast. Watch the coffee market. If you study the history of coffee, you'll see that it's absolutely explosive. Once these trends begin, and they can go for months and months, huge, huge rallies coming. So watch them very closely. Look for timing triggers. Don't catch the falling knife.
Got it. Okay. Lumber coming up. You've been a big proponent of this market.
I guess we can call it the OJ, coffee, sugar, and toothpick market, because I know that was really bad. But, hey, lumber, I love the lumber market. It's the perfect storm, by which I mean everybody hates lumber. I love markets that most people hate. Look what's happening in lumber. We have got weeks and weeks of bullish divergence, momentum continuing to move higher, prices moving lower, finally starting to show some basing behavior here. The thing to do in lumber is to watch that weekly lumber chart. This is a daily. Watch the weekly for a breakout. Look at the Commitment of Traders report. And even though lumber is a very small market, Commitment of Traders is very revealing. Not too long ago, Commitment of Traders commercials number was long. They were essentially long the market. That is usually a precursor to a big move up. Unless you believe that the entire U.S. economy is going to hell in a handbasket, that the housing market will never come back, that construction is never going to be big again, or unless you believe that everything all over the world has slowed down, demand for lumber is going to be huge. And the beauty of this move is that for almost every underlying commodity move, there's a concomitant stock move. So if someone's afraid of the lumber market because it's so thinly traded, there are lumber stocks, there are paper stocks, there's Weyerhaeuser, there's Pine Creek, I think it's called Pine Creek Lumber, Pine Creek Timber. There are many of them. In fact, I understand from one of my clients in England that there's even a lumber ETF now. I pick this as probably the best of the best possible trades. Keep your eye on it.
Okay. All right, that sounds good. I've got a couple of questions real quick on the shout box. Jake, what's your take on the Hong Kong HSI?
I think the Asian markets be under pressure along with the U.S. markets. I don't see a low there yet. I think whichever way the U.S. market goes, the overseas markets in the Pacific Rim will go as well. There's been a lot of talk also about the BRIC markets, the Brazil, Russia, India, China market, especially the South American markets, which are flirting with their all-time highs. I don't buy into that argument either. I think if there is an economic slowdown, it's going to affect them all. Now, mind you, I also am an inflationist, by which I mean I don't think we're going to get a serious economic slowdown. If there's any danger here, it's danger of inflation rather disinflation. So, again, to answer that question, I'm bearish on the Pacific Rim markets right now, but let's watch them because if we come back down to long-term support, they will be a buy.
Okay. All right. And Bobby Mack, who's in the shout box, he wanted to know about shorting crude oil. Ladies and gentlemen, Jake had already mentioned, not yet. And,
yeah. We don't want to stand in front of that train. Not a good idea.
No, I don't want. No, not me. Do you think the U.S. Congress will curb speculation in the commodities market? You know, that's a good question.
Yeah, that is a beautiful question. There's no telling what kind of stupidity these people will get involved in. You know, there's regulation and there's too much regulation. While I don't think that it is out of line to raise margins to a reasonable level, that function's already been given to the exchanges. That function's already been given to the CFTC. Let them do their job. We saw margins increase in soybeans and the grain complex not too long ago. It did its job. The markets got knocked down. So, no, I'm very much in favor of less government regulation as opposed to more, because if you really want to screw something up, get the government involved.
Okay. All right. Let's go into RBOB, gasoline, unleaded gas. What's going on there?
Same situation as the crude. Crude's the leader here, and even though at different times of the year you've got different markets in the complex that take leadership, especially at this time of the year in RBOB, I don't think there's any difference essentially between these markets, and I would include in that natural gas. One of my big picks for this year was the natural gas market. It was the only one in the complex that had not started to move. It's done its move. It's made its big rally. I think from this point forward we start looking for highs, not lows. But again, I reiterate, no timing triggers yet.
Okay, and Spider's the next one.
Spider is basically the same analysis as the S&P, and if I think we have the S&P chart somewhere, that chart has already given bearish momentum divergence sell triggers and may within the next few days give accumulation distribution sell triggers. But I want to reiterate, January lows is where we should find support. I do not expect a great, big, huge collapse in these markets. We've had all sorts of bad news, and the markets have been extremely resilient, very impressive. What's next? I really don't think there's a whole lot of bad news coming next, but January lows, look at those, and look for value. Be a value investor. This is the great, great time to be a value investor.
Okay. All right. Japanese yen, and before we get into Japanese yen, Curious Trader said he couldn't hear the response on the sugar. Sugar was not heard due to the sound breakup on the broadcast. That would be my technical staff. Shame on you. And can you please repeat the earlier question? So
yep.
Basically, your sugar take on the sugar market.
Still bullish on sugar. Look to buy sugar at monthly support, which would be the bottom of the 10 by 8 moving average channel. Wait until we get down there. Look at your daily triggers and buy the first daily buy signal after you get down to monthly support. No change, in my opinion, on sugar. Still looking very bullish to me once we have a trigger to go long again.
Okay. Yen.
I like the yen. I think the yen is probably the only currency relative to the U.S. dollar that shows me potential. There's been a 7-year cycle in the yen. It's been about as close to clockwork for a cycle as you can get. That market is turning around, has given us a number of buying opportunities. The chart shows a perfect textbook case of bullish divergence, namely momentum up and price down. Watch this one also for breakout to the upside. Been a lot of negative press about the yen lately. I don't think that has very much import or significance in terms of what the cycles are saying, and they are saying bullish against the dollar.
Okay. T-bonds.
I'm convinced interest rates are going higher. So if you are convinced, as I am, that interest rates are going higher, that the Federal Reserve is done with their interest rate manipulation, then you've got to be bearish on futures. We recently had a sell signal. It's showing on the chart. We have followed through only slightly to the downside. I think there's a lot more coming on the downside. Bearish on the bonds, bearish on the Treasury notes. Look for higher interest rates.
Got it. Mini size gold.
I like the gold market. Last time I was on, I indicated that gold was due for a rally. That rally came. We came back up into the resistance area. We're in that area right now, but in terms of the big picture, I don't believe the gold market's topped yet. In fact, we came down to resistance very perfectly, and now we're rallying. It's going to take some while. The ideal time frame of the year in gold is August, September. Don't be surprised to see a choppy market until then. If we're going to make new all-time highs, I think it'll be sometime in mid to late September.
Okay. And silver. You sent us a silver chart.
Yep, same basic situation as the gold. Silver market came back down to support in a long-term bull market. This is one of the first moves we've had to support in quite some time. Look to buy the silver again, bottom of the moving average channel. I'm not convinced that the silver has topped yet either. The key indicator there would be the cheap silver stocks. Look at the cheap silver mining stocks. When the next highs come or when the next rally comes, that will give us our key to whether the market's made a long-term top or not.
Okay. All right, that sounds good. All right, that's all the charts that you sent to us. That's a lot of markets, Jake.
A lot of markets, a lot of stuff to do. It's a great market. I haven't seen markets like this in the last 40 years, which is about as long as I've been involved in trading.
Right. No, I think that we're in for some big booms. Okay, so at this point, what I want to do is say thank you so much, and I'm going to give Pete just a bit of airtime so that he can talk a little bit about this. Do you have any questions for Pete about this technology, what it's doing?
I'd love to see it in action. I think it's a great idea, fabulous idea. It brings everything we're doing in Internet communications to the next level. And, hey, if there's a great way to save gas, this is it, because you really don't have to do much traveling. You can just let your camera do the walking.
Yeah, absolutely. That's exactly the intent of it. And, you know, with the gas prices, that's an unexpected plus for us. A lot of people are fretting about the gas prices for economic reasons. But as far as video conferencing across the world, it's always languished because people really never found the real justification for it. But I think the gas price issue just might be the thing that takes people over the top and decides that communicating visually is a lot better than taking a trip that is going to cost a lot of money.
Well, I will say this. I've noticed in my educating people over the last year or so, attendance at webinars has increased dramatically. People save money. They don't have to waste time. It's an incredible, incredible way to communicate, and the more we can replicate the actual face-to-face situation, the better it is, because a lot gets lost just in the voice communication, but when you really see somebody, it makes a big difference. So, got to let your camera do the walking for you. And hey, war does make strange bedfellows, and with this incredible increase in gasoline prices and the cost of travel, it's a perfect opportunity for your type of technology, and like I said, I would love to see it in action. Maybe next week we can.
Yeah,
absolutely.
We'll give it a shot. Okay, Jake, thanks so much. And one last thing, the web address for your webinar tomorrow.
They can just go to my website, www.trade-futures.com. And there's a link on the very top right to the webinar for tomorrow. I call it the Big Kahuna, Finding the Big Kahuna Trades. And I didn't say cojones, I said kahuna. Okay.
All right, Jake, thanks so much.
Right.
Thank you.
Thank you.
All right, that was Jake Bernstein, Chief Trader at Network Press. I'm Michael Yorba. We'll be right back with Hector Gavin of RJO Futures. Sit tight, and please, don't get camera shy. Come on into the show. Let us experience the technology. We'll talk to you in just a minute.